So you applied to refinance your mortgage and the lender said no. If that happened to you here in Sacramento, trust me, you're not alone. It's actually more common than people think. A rejection isn't the end of the road. In a lot of cases, it just means you need to reposition your application, not give up on refinancing altogether. Let's talk about why this happens and what you can do realistically to turn things around. Most refinance denials come down to a few things: credit scores that are a little too low, debt-to-income ratios that feel too high for the lender, income that looks inconsistent on paper, especially for self-employed folks, or maybe an appraisal came in lower than expected. And honestly, a lot of Sacramento homeowners get turned down simply because they applied with a lender who only works under really rigid guidelines when they didn't have to. So let's talk about what actually moves the needle. The first thing I always tell people: pull your credit report, not just the score, the details. Sometimes a small error, a forgotten late payment, or high credit card utilization is all it takes to tank an application. Fixing even 20 to 40 points can completely change your refinance outcome. Next, take a look at your debt-to-income ratio. If lenders think your monthly obligations are too high compared to what you earn, they get nervous. Paying down a credit card or consolidating a couple balances can make your application look dramatically stronger the next time around. If you're self-employed gig workers, freelancers, business owners, this part is especially important. Document your income in a way that actually reflects reality. Tax returns don't always tell the full story, especially if you write a lot off. Many lenders will accept 12 to 24 months of bank statements or a profit and loss statement instead. That alone can turn a denial into an approval. Sometimes adding a co-borrower with stronger credit or more income helps bridge the gap. Sometimes it's as simple as taking a second look at your property's value. If your appraisal came in low, recent comps or updates to the home may justify a reconsideration. And here's a big one. While you're preparing to reapply, keep your financial picture still. No new loans, no new credit cards, no big purchases. Just hold tight until you get the approval you want. But honestly, and this is where homeowners often see the biggest difference, stop relying on just one bank. Banks approve based on their own narrow set of rules. Brokers can shop dozens of lenders, including non-QM lenders who specialize in people who don't fit the traditional perfect lending box. These non-QM programs are absolute game changers. You have bank statement loans that use your deposits instead of tax returns, asset-based loans where your savings qualify you, DSCR loans if you own rental properties, even interest-only refinances if you just want lower payments up front. You don't have to fix everything. You just need a lender who actually looks at your real financial picture. So if your refinance was rejected in Sacramento, don't let that be the end of the story. With the right strategy, the right documentation, and the right lender that no can turn into a very quick yes. If you want help figuring out your next best move, reach out to Sacramento Condo Finance. We'll walk you through your options, compare traditional and non-QM programs, and help you find the path that actually fits your situation.